When you go and sit among people who know about stock markets, those adults and investors who are completely aware of the whole game, you will feel like the most ignorant person existing on the planet. Because that is exactly what happened to me a few months ago. I was sitting with a bunch of friends and they were all discussing things about the market conditions, things about how this particular company is going up and down and here and there, and how they just invested and got a pretty good amount of profit. I could not understand anything. So I asked them a simple question. What makes you want to invest into this particular company or this particular index at this particular time? Not all of them, but some of them said that, oh, I actually heard from a friend the other day that this may go up, or this company is doing pretty good and it has incentives for the future. So I was like, why not take the chance? I was like, okay, cool. But that, my friends, is called investing on tips. Tips are basically the informal suggestions and advices that you get from informal bodies, such as your friends or your family members, anyone. And that got me thinking that how come you are putting your hard-earned money into any tip you get to hear? Like, there has to be some research that you must have done for that company to be like, oh, I think I should do it in this company definitely because this will grow my money. But apparently that is in very less cases. Why is it that we human beings have trust issues for almost everything, but we blindly trust any tip or advice that we might get from a random person? So I was like, you know what? What is the broader perspective to all of this? What even makes someone want to invest in the stock market? And then I arrived to a simple framework of asking from a beginner point of view. Hey everyone, welcome back to Fun Me Not, and today we are going to be breaking down certain beliefs about the stock market and how it actually works, so that we are doing at least something different from the existing traditional investing behaviors. What would be your go-to question as a person, as a beginner trying to enter stock market? And trust me, it's not what you think it is. It is not what is stock market. It is apparently how to get rich through stock markets. You see, that's the thing. We humans are often much more oriented towards results. And that isn't just the case in big terms. It is even the smallest activities we do. So I decided to narrow down the question to the very, very root level. Why does stock market even exist? So I might need to add a little bit of history here, but will not make it boring. The stock market started way back in the 1600s. That old, yes, where merchants in Europe were like, I need money to fund these long and risky voyages. So instead of one person taking all of the risk and burden of that voyage, they started selling small shares of their voyages to the investors, basically saying that you buy this particular share of our voyage, and if we return back with profits, you get a cut. That idea became the very foundation of the world's first stock market. That's literally how modern investing began. Now that's a lot to the story, but let's keep that for the next time. Next question. Why would a company even list itself in stock market? How come there are so many big companies listed on the stock market? What are they doing? Why are they doing what they're doing? So, of course, every business needs to grow over time. And what is the one thing you need for the business to grow? Capital. Businesses, whilst their growth journey, run out of funds to keep up with that growing process. Maybe they want to build more factories, or maybe make new products, expand their incentives to global countries. Again, that growth needs money. So instead of taking loans and going to debt, companies raise money through the public, that is, from you. How? By selling shares of their ownership. That means the moment you're buying shares of a company, you're literally buying a part of their ownership. You are becoming a part owner. Think about it. Would you want to be the owner of a dying company or a growing one? That process of listing shares of a company to the public is called IPO, short for Initial Public Offering. And it's not just us who is getting the benefit of ownership. The company is getting benefits too. They are raising capital because we are giving them the money, and they build credibility and trust. The moment you hear that, oh, this company is going to get listed on the market, it's a big deal. Like, it subconsciously creates that idea of a company that, oh, it's doing pretty good. It has a pretty good image. So that's called building credibility and trust. So the stock market exists because companies want to grow their money and investors want a chance to grow their money as well. Now, if it's so simple, why do people stress about it so much? Buy a stock, then when a price reaches a certain level, sell it off. But then why do those prices even go up and down in the first place? Why is it that one particular company is going through an upward trend in the same index as another company which is going through a downward trend for days? Simplest answer, supply and demand. That is actually just one of the factors. In fact, if more people want to buy a stock, want the demand, right? The prices would go up. But if more people want to sell off their stock, the prices go down. So if the demand is high, but the supply of the stock is low, what would happen? The prices of the stocks go high. But then what influences demand?